Hey everyone, this is Angel Mondragon here with PlutusX. Just going to be quickly going over this whole trading series that I'm going to be starting. It's a completely free trading course. I know a lot of people charge thousands of dollars for something that's very similar to this. However, I just want to be able to offer this type of knowledge for free. I believe that knowledge isn't necessarily power, it's what you do with it. And knowledge, or the lack of it, should not be the crutch for your success. So I want to be able to give you guys the opportunity to at least have the foundation for trading. So it's here for you. Whether or not you take advantage of it, that's up to you. The opportunity, the knowledge itself is here and readily available. All right, let's dive right into it. So what is crypto? Well, crypto, if you aren't aware, check out my blogs. We have a lot of different articles on it. We have another one called Blockchain 101, and this just goes into kind of a high-level overview of what blockchain is. And the first implementation of blockchain technology under a cryptocurrency would be considered Bitcoin, which was released by Satoshi Nakamoto in 2008. And ever since then, we've been seeing a release of new coins. Currently, we're sitting around 1,800 coins as per CoinMarketCap.com. You can check them out. And this is just kind of going over the volume itself as well. So you can see that we're sitting at 5.3 trillion is the forex market, 257 billion is the stock market, and the crypto market is tiny right now with only 13.7 billion of volume coming in circulation on the daily 24-hour time range. So this is just kind of the volume that you can experience. However, even though the volume is very low, there's a significant amount of volatility associated with cryptocurrencies, which inherently is a bad thing. However, because you're going to be learning how to become a skilled trader, it's going to be a tremendously beneficial thing for you when it comes to making profits. So, what is cryptocurrency and when can you trade it? Easy. Is 24/7, 365. The only other market that rivals this would be Forex, foreign exchange currencies, and that's 24/5. So the great thing about having a currency, or excuse me, the great thing about having an instrument that you're allowed to trade 24/7 means you're able to adjust the trading to your lifestyle instead of your lifestyle to trading. What I mean by that is you're able to trade when it's convenient to you, essentially. And the whole purpose of trading, and you'll see as we go along throughout the series, is to be able to set up trades via limit orders or stop orders, and just kind of set and forget, essentially. So you're just looking for trade setups. You set it, you forget it, you let it do its thing. You can't predict the market, and staring at the screen like a hawk isn't going to help you out much either. So the whole purpose is just set it, forget it, and then just live your life. Come back, check out a loss if you have any, and then the whole goal here is obviously to be profitable, so you can see the profits that you've gained as well. So that's one of the beauties of being 24/7, and then also having a market that's 24/7 means that you're going to be having a lot of overlap with different time zones as well. And we're going to go into that later on in the series. It's kind of be a more intermediate or advanced trading strategy. But there's like, quote unquote, the London daybreak. And that's just when, if you're in America, when Europe opens, you're typically going to experience a little bit more volume and a little bit more volatility associated with that. Similarly, when there's overlap of time zones that are open simultaneously. So, for example, like the Asia Pacific and Europe, it kind of overlaps with each other, so you're going to experience a little bit more volume in those time zones as well. So those are things to keep in mind. We'll go into greater detail and we'll get a little bit more granular on those benefits for trading in a market that's 24/7. So what can you trade in the crypto market? Well, like I mentioned, there's about 1,800, or excuse me, 1,800 currencies that are currently available as per coin market cap. And just like currency or forex, you have a base pair, which is typically going to be USD, United States dollar. You do have 8 major pairs, the British pound, US dollar, the Japanese yen, the Australian dollar, the New Zealand dollar, and the euro. I almost forgot that. So those are your 6 main currencies, and then between those you got 8 pairs as well. Well, with cryptocurrency, it's pretty similar. You have Bitcoin USD, you have Ethereum USD, you have Litecoin USD, and Ripple USD. There's a few others that have a USD back pair, but typically you're going to see most of these other altcoins be using Bitcoin, Ethereum, or Litecoin as their base pairs as well. So those are things to keep in mind. But like I said, the top coins for us are kind of the ones that you see on the screen right now. Outside of that, there's 1,800 other coins for you to take advantage of. And just because the volume is low on some of these coins, it doesn't necessarily mean that they're not great opportunities to trade. And we'll go into, once again, different trading strategies and how you could utilize those trading strategies for these coins that have lower volume. So you could be yielding a higher profit as you diversify a portfolio that best suits your trading strategy or best suits your trading personality. Now, the great thing about cryptocurrencies are there's a great potential for profits. And I say potential for a reason, just because the inherent volatility that's associated with it. People can randomly throw a dart in the dark and pick one coin, especially in 2017, and it would do roughly 1,300%. So that is ridiculous, and that's 80% of coins. Imagine that. So if you randomly selected 10 coins that were in ICO, or just leaving out of an ICO phase, which is an initial coin offering, very similar to an IPO in conventional business, which would be an initial public offering, where the stock becomes public to obviously the public, and they're able to trade it. As before, it was restricted exclusively to accredited investors or private investors. Well, similarly with an ICO, a coin is listed onto an exchange, and that means the public is now able to purchase the coin itself. And like I said, if you picked 10 coins in 2017, 8 of them would on average do about 1,300%. That is ridiculous. That being said, people were making tremendous profit, or taking advantage of I would say, like a miniature retail bubble, and they weren't necessarily understanding the consequences that were to follow of such a bull market. They didn't understand that at a point there's going to be too much of a bull run, and the market, or the bubble, quote unquote retail bubble, needed to burst, and a retracement needed to occur. And everyone who hasn't been experienced trading previously would kind of see this lull period or this retracement period as a negative thing. But to me personally, it's great because it's taking out all of the bad companies. One, because we did start off with a little over 3,000, and now we're about half that as far as currencies that we're allowed to trade, or coins or tokens, and also it validates the market itself. So those are a few things to keep in mind. And then, just as like I was saying, there's potential room for tons of profit. As a result, with all this volatility, there's tons of room to lose all your money. And that's where later on in this next video, we're going to talk about risk management, and it will help you mitigate those losses. So those are things to keep in mind. Great room for profit. A lot of volatility equals tons of room for profit. However, that volatility, if you don't know how to take advantage of it properly, it's going to take advantage of you, and you're going to lose all those profits that you just gained. So let's be mindful of that as we go forward. So a few things to keep in mind is the bid, ask, and spread when purchasing these digital assets. Now, the bid price is the price that the exchange itself is willing to sell it to you for. The ask, so if you're trying to purchase, exchange trying to sell it to you, the ask is if you're trying to sell, and the exchange is trying to purchase, essentially. Now, the exchanges are typically using, this is not that relevant, but ECNs, which is electronic communication networks. If they're not using that, they're using STPs, which is straight through processing, and those are just ways that they can communicate your orders with orders or with other orders in the network. Now the spread is the commission or the price that the exchange is making. There's other fees associated with trading. The spread is one of them, a commission is another, but common with cryptocurrencies is going to be the spread. Now, just like gold, if you're trading gold, especially in a forex market, we call these pips. There isn't a set price for a pip in gold. It's based off of units, but just to make things a little bit better for you to understand, a little bit easier for you to understand, we're going to break it down like this. So the penny placeholder is going to be called the pip in this explanation. And one pip, if you see on the bottom left, if 10 Bitcoin units in one lot, then 1 pip equals 10 cents. If 100 Bitcoin units in one lot, then 1 pip equals $1. So right here, there's 5 pips, and depending on one of the lot sizes we have, let's say 10 Bitcoin units in one lot, for this particular example, we're paying a commission or a spread of 5 cents, and it says it right there. So the way the spread is determined is by taking the bid and ask price and the difference of the two. That's essentially how spread is determined, and once again, that's how the exchange makes money. This isn't the only way, but this is one of the main ways, especially in cryptocurrency. So, tips, rules for success. Number 1, be disciplined. Follow the rules. You're going to be developing a strategy, and you don't want to deviate from those rules at all. Never revenge trade. Now, revenge trading is very common, and it's something that I am guilty of myself. When I first started in Forex a couple years ago. Now, what revenge trading is essentially you upping your risk for a reward after losing a trade. They also call it following a trade, but revenge trading is a quick way for you to lose your account, and that's something that you definitely want to stay away from. And then following your proper rules, and then once we go down on the next video, risk management, you're going to be able to have those rules and your own risk management next to you, so you can not deviate from that at all. So you're mitigating risk, mitigating losses, excuse me. And then 2, never compromise. So never compromise your strategy. If it is quote unquote close to your actual strategy, the trade setup, that's just a quick way for you to lose your money. If you have, once again, a strategy and rules, do not compromise those rules. Don't say because it's close to a trade setup, then you can make the order, because you have your rules for a reason. You've back tested that strategy. You know it's effective, and it's going to be helpful for you when you're actually in the trade. Because if you trade based on intuition and you think that it's close, or you're just trading to trade instead of waiting for a trade setup, typically in the next video we're going to talk about emotion. You're going to be going through a lot of fear. You're going to be watching the price all damn day, and I know that for a fact because it's something that I'm guilty of myself, once again, when I first started trading. So it's easier said than done. You're probably thinking to yourself, well, it's not that difficult to follow a strategy and follow a set of rules. It is, trust me, your emotions get into this and you start playing mental games. It's okay, it's going to happen to you, but setting yourself up for success is the best way to avoid those type of mistakes. Number 2, there's never going to be 100% success rate. I don't care what you say, unless you're an algorithm, it's nearly impossible. There's a small possibility for it, however, unlikely you're going to be that good. I'm not that good, and it's okay. You can be a 70%, 75% trader. You could even be a 38% trader as far as win or lose ratio, but it's about profitability. So you could have an 100% or 99% success rate, but if that 1% loses everything that you gained or more, it doesn't matter. So you want to be a profitable trader, not necessarily worry so much so about the ratio of wins. You want to adjust the strategy based on data alone. You don't want to go into 3 out of 10 trades, see that you lost, and then decide that you want to change your strategy. No, do not deviate from your strategy at all, not unless you have a reliable data. Your strategy is probably right, especially if you back tested it and you know it's effective. Don't let your emotions get involved. Just continue with proper risk management, you'll mitigate those losses, and you'll be able to start seeing a little bit more of a pattern and gain a little bit more data on how your strategy works in real life data. And that's why when you're testing your strategy, not only are you back testing, but you're also testing via a demo account, so you know how it works and how it feels trading in a live scenario. Lastly, control your emotions. There's three main emotions that you need to worry about: greed, fear, and hope. And then also having a safety net will help you once again conquer those emotions. So if trading is your only source of income, typically you're going to be a little bit more greedy, and then you're going to be a little bit more fearful. You're going to be extremely more optimistic and hopeful as well, which is a bad thing. Optimism is good, obviously, but you want to be deterministic about this whole thing, and be very objective. Rely on your strategy, not on your hope for the market to react the way you wish it to react. So those are a few things to keep in mind if you want to be successful. The requirements for trading, very simple: laptop, computer, phone. I should put phone in there, it's okay. For money, you want at least $100 USD. You're going to be demoing first. I would recommend demoing for 6 months up to a year. I know that's a long time. A lot of you are going to want to jump in immediately. I'm not going to be able to stop you, but I can't stress this enough. Demo your account for 6 months minimum. If you can, after you develop the strategy, be successfully profitable with that strategy for 6 months consecutively, then and only then should you go with real money. My honest recommendation is $10,000 to start with, just to have any type of meaningful trading, meaningful profits. Outside of that, $100 is okay. Especially in cryptocurrencies, it's fine. You can start with as little as $10, but $100 to start seeing something. And then also a broker account. You need to have a broker account and a trading platform, so you can do technical analysis on. We're going to be using TradingView, and I'll show you how to get to them eventually. When we get there, I also have it linked in the Medium post as well. And the broker account. Once again, disclaimer, we are developing a broker account. I'm going to naturally be promoting our broker account. However, there are a lot of great ones out there like Binance, and I'll list some of the top 5 broker accounts as well for you to consider. But we are developing one, so keep us in mind. We're going to be trying to releasing January 31st, and yeah, that's pretty much it. So that's what crypto is. That's the landscape. That's the background of the industry itself. If you have any more questions, feel free to follow us on our Telegram channel. That's going to be linked in the Medium post as well, or in the description of this video below. Thank you again, and hopefully we'll be putting together a live webinar so you can start asking us questions after you go through the beginner series. So I recommend you go through the beginner series before you start diving into these live webinars with Josh and I, possibly Patrick, where we're going to be going through trade setups and then live order executions if the trade is set up and available. I will also be answering your questions live as well. So yeah, it's going to be fun. Thank you again, and see you guys in the next video. I believe we're going to be talking about emotions, so that's something to keep in mind. Check out the next video. It should be in the Medium post as well. If not, it's on this YouTube channel. Thanks again. Talk to you guys soon. Bye.